Today, I want to talk about something that could literally change your financial future. If you've ever felt that investing is only for the wealthy, that it's too risky, or that you simply don't have the knowledge to begin, then stick with me for the next few minutes. Today, I'm going to show you the easiest way to start investing in 2025, no experience needed. You might have heard the common take, investing is complicated only for experts or requires a boatload of cash. I used to believe that too. But here's the truth. With the advancements in technology and innovative tools like fractional shares and robo-advisors, investing has become remarkably accessible. Even with as little as $5, you can start building your wealth, and I'm here to walk you through exactly how. I'm not just sharing theory, I'll introduce you to a real, relatable example of someone who took the leap with nothing more than courage and determination. Plus, I'm going to break down the entire process into clear, actionable steps so that by the end of this video, you feel confident enough to take that crucial first step. Let's dive in. Meet Sarah, a real-world investment story. Let me tell you about Sarah. Not long ago, Sarah was a recent college graduate just starting out in her career. Like many of you, she had dreams and ambitions, but little knowledge about investing. Every time she heard the term investing, she felt overwhelmed by thoughts of complex charts, steep risks, and dollars she wasn't sure how to manage. The prevailing belief was that investing was only for those with large sums of money or expert advice. One day, while scrolling through social media, Sarah came across an article about fractional investing. The concept was simple yet revolutionary. You didn't have to buy an entire share of a popular company like Amazon or Tesla. You could buy a piece of it for as little as $5. That was her aha moment. Suddenly, investing didn't seem reserved for a select few. It was something she could actually do. Sarah downloaded an app. She started with Robinhood because it was user-friendly and offered commission-free trading. With that, she bought her first fractional share and felt a rush of excitement. Not stopping there, she explored robo-advisors like Betterment, which asked her about her goals and risk tolerance and then created a customized portfolio for her. The beauty of these robo-advisors was that they automatically reinvested her money in diversified index funds with minimal effort on her part. Sarah began setting up an automatic transfer of $25 each month. It wasn't much, but through the magic of dollar cost averaging, those small contributions began to add up. Over the next few years, she watched her modest investments grow steadily. Today, Sarah has a financial cushion that she can be proud of, all thanks to taking that first small step and staying consistent. Sarah's journey is a powerful reminder that you don't need to start big or have all the answers before you begin. What matters is the willingness to start, a clear plan, and the determination to keep going. And that's exactly what I want for you. A step-by-step guide to start investing today. Now, let me break down exactly how you can start your own investment journey in 2025. I'm going to share a step-by-step guide that's simple, practical, and designed for someone just like you, no experience required. Step 1, set your investment goals. Before you open any account or download an app, take a moment to define your why. Ask yourself, is your goal to save for retirement, buy a home, fund your children's education, or simply build wealth over time? Jot down your goals on paper or in a notes app. When you have a clear vision of what you're working toward, every investment decision becomes more meaningful. For example, if you're aiming for retirement, your focus might be on long-term investments with steady returns. If you're saving for a down payment on a house, you might lean toward less volatile options. Your goals will set the stage for the kind of investments you choose. Step 2, establish a simple budget. You don't need an elaborate financial plan to start investing. A good rule of thumb is the 50-30-20 rule. Allocate 50% of your income for necessities, 30% for things you enjoy, and 20% for savings and investments. Even if you begin with a tiny amount, such as $5 or $10 a month, what matters is the habit of investing consistently. Creating a budget helps you understand your cash flow. Once you see where your money goes each month, you can identify small amounts that can be shifted into your investment account without compromising your daily living. Step 3, choosing the right platform. Here's where modern technology comes into play. For beginner investors, there are two main types of platforms you might consider. If you're interested in picking your own stocks or ETFs, check out apps like Robinhood, Public, or Fidelity. These apps allow fractional investing, meaning you can buy just a portion of a share, which is perfect if you're starting with a small amount. If you'd rather leave the heavy lifting to someone else, a robo-advisor is your best bet. Platforms like Betterment, Wealthfront, and SoFi Invest offer automated investment services. They'll ask you a few questions about your financial goals and risk tolerance, then build a diversified portfolio for you, often using low-cost index funds and ETFs. Both options are designed with simplicity in mind and often come with low or no fees, ensuring that your hard-earned money goes towards growing your wealth instead of being lost to high commissions. Step 4. Start small with fractional investing. One of the biggest barriers to investing is the misconception that you need a lot of money to get started. With fractional investing, you can purchase a piece of a high-value stock without shelling out a fortune. Whether it's a company you admire or an industry that excites you, jumping in with just a few dollars can make a big difference over time. Imagine buying a fraction of a share in a company like Tesla or Amazon. With platforms like Robinhood or Fidelity, you can start with as little as $5, allowing you to be part of a market that once felt out of reach. Step 5. Automate your investments with robo-advisors. Time is your most valuable asset, and automation can make your investing journey easier. Setting up automatic transfers to your investment account means you're consistently putting money aside without having to think about it every month. This strategy, known as dollar cost averaging, allows you to buy into the market at different times, averaging out the cost and reducing the impact of market fluctuations. Robo-advisors not only automate your contributions but also handle rebalancing your portfolio. They adjust your investments to maintain the ideal mix based on your goals and risk tolerance, taking the emotion and stress out of managing your money. Once you've taken the plunge and started investing, remember that your journey doesn't end at the first transaction. Make it a habit to review your portfolio periodically, say every few months. This is not to encourage frequent trading, but rather to check if your financial goals have shifted or if you need to adjust your investment strategy. During these reviews, reinforce your understanding of market trends and even revisit your initial goals. Over time, as you learn more, you can gradually adjust your risk tolerance or diversify further. But always remember, the key is consistency. Small, regular investments can compound into significant wealth over time. Before you embark on your investing journey, here are some common mistakes you want to avoid. One of the biggest errors is not having an emergency fund. While investing is critical for building wealth, it's equally important to have 3 to 6 months worth of expenses saved up. This fund acts as your financial safety net. Another mistake is trying to time the market. No one can predict with certainty the perfect moment to buy or sell. Instead, focus on a regular, steady approach, buying a little each month regardless of market fluctuations. Overconcentration in one stock or sector is another pitfall. Diversification is key. By investing in index funds or a mix of assets, you spread the risk and avoid putting all your eggs in one basket. Also, be mindful of fees. High management fees or trading commissions can eat into your returns over time. That's why opting for low-cost platforms and funds is often the smartest strategy for beginners. Finally, don't be discouraged by the small beginnings. Every investor starts somewhere. What matters most is that you start and remain consistent. Even tiny, regular investments can grow into a substantial portfolio over time. Let's take a moment to look at some tangible benefits of beginning your investment journey right now. First, accessibility is at an all-time high. With fractional investing, you don't need hundreds or thousands of dollars to get started, just a few bucks is enough. This removes one of the biggest barriers for new investors. Second, with robo-advisors, you have a professional portfolio manager in your pocket. These platforms automate your investments, take care of rebalancing, and can even provide tax-efficient strategies, making sure that your money works as hard as you do. Additionally, the power of compounding cannot be overstated. The earlier you start investing, the more time your money has to grow exponentially. Think of your future self thanking you for every small, consistent contribution as those dollars turn into a robust nest egg over time. And remember, investing isn't about becoming an overnight millionaire. It is about laying down the groundwork for financial freedom brick by brick, day by day. A moment of wisdom from Proverbs. If you ever feel hesitant or overwhelmed on your journey, remember the wisdom found in Proverbs 21:5 NIV, "The plans of the diligent lead to profit as surely as haste leads to poverty." This verse reminds you that careful planning, consistent effort, and a patient mindset are the true paths to prosperity. Much like Sarah, who began with a small step and nurtured her investments patiently, you too will see the rewards of diligence. Let this verse be a daily reminder that every smart, measured decision brings you closer to financial stability. If you found value in these tips, please do take a moment to hit that like button and subscribe. Our goal is to help you and every viewer out there reach that first milestone of financial confidence. Please take a moment, hit that like button, subscribe to help us reach 1,000 subscribers. Every click and share not only helps expand our community, but ensures these life-changing tips reach more people just like you. Remember, you don't need to be a finance guru to start investing. Just like Sarah, you can begin with a small, manageable amount, learn as you go, and let technology do most of the heavy lifting for you. Take that first step today. It might be as simple as downloading an app, setting a financial goal, and scheduling an automatic transfer for next month. Visualize your future. Imagine a time when you're financially secure, confident, and even enjoying the freedom to pursue passions beyond day-to-day bills. Each smart move you make today builds that future. Don't let misconceptions hold you back any longer. With fractional investing and intuitive robo-advisors, the era of investing is only for the rich is long over. The power to build your wealth is right in your hands. So what are you waiting for? Open your investment app, select your platform, and buy that first fractional share. Follow the steps we've talked about, set clear goals, budget, choose a platform, and automate your investments. And above all, stay consistent. Over time, those small investments will compound into something truly significant. Remember the wise words of Proverbs 21:5, diligence and planning pave the way to profit. Just as Sarah transformed her financial future starting with just a few dollars, you too can create a secure tomorrow by making informed decisions today. I truly believe that every journey starts with a single step, and yours begins right now. Trust in the process, learn along the way, and never be afraid to adjust your strategy as you grow more confident. Your future self will thank you for making this decision, and soon enough, investing will become a natural part of your financial landscape. Thank you for hanging out with me and for taking the time to learn something that could potentially change your life. If this video resonated with you, please remember to hit that like button and subscribe. And if you have any questions or if there's something you're curious about, drop your thoughts in the comments below. I read everyone, and I'm here to help you every step of the way. Here's to your financial future, simple, steady, and sustainable. I'm rooting for you, and I can't wait to see how far you'll go. Stay smart, stay consistent, and until next time, take care and keep investing.